Thank you for tuning in to Investment Insight presented by McCay Wealth Advisory. My name is Hayden Proffitt, and joining us today we have Brent McCay. Brent, a topic or an idea that's kind of come up recently, the 24-hour trading window. Can you talk to us about that?
Sure. So when COVID came around and the pandemic started, people were at home, the amount of online trading or the trading that occurred after hours hit an all-time high. About 1 billion shares on average were traded after hours. So the typical hours of a trade day are from 8:30 Central Time to 3 p.m. Central Time is when the markets tend to be open for the public market. Well, this is trading that occurs after those times. But now the popularity is gaining again, and now we're trading over 1 billion shares at night again. And so this is leading a lot of people to believe that Interactive Brokers and Robinhood are two of the bigger companies that do this, and they're leading to where there may be a 24-hour trade day, where there may not be a stop to the public markets. And so Stephen Cohen's firm actually has applied for a 24-hour exchange that would be open at all times. Now, personally, I don't love the idea of the markets being open at all times because, obviously there's a staffing issue there. You have to find a way to have that there. But, Schwab's with us as a partner, and they have 24-hour assistance. So there'll be a way for us to manage that. But one of the issues for investors to be wary of when you're doing trading after hours is it tends to cost more. For that convenience, for that ability, you don't have a public market. So you're not trading where everybody knows what's going on. These are matched orders. And according to Bloomberg's article that we just read, there's about a 30 basis point difference in fees. Because basically the bid and spread are about 30 basis points, which is pretty high for trading. When most trades are a few basis points away, they're kind of close. There's not much margin. And when we say basis points, that means about 0.3%. Well, if you're trading, $100 million, or you say $1 million, and you're at 0.3%, that's $3,000. So you're talking about a $3,000 difference on a large trade like that. And so that could be a lot of money. And so one of the concerns we, of course, would have with doing after-hour trades is because there's not as many people in the market, you don't have that average of 12 billion shares a day when the market's open versus 1 billion a night. When you don't have as much, demand, you don't have as good a price. And so just like if you're trying to sell a house in 2022 or 2021, you're getting usually a better price than if you're selling a house in 2024.
Right, and I think GameStop was one of those companies that kind of,
Correct.
I don't want to say fell victim, but they were definitely impacted by
so
overnight
recently,
trading.
That's been a very popular stock for some crazy activity, not really relating to the business, but more to just speculation. And you're seeing people lose or gain 20% overnight on trades that dissipate. When the market has low volume, you're having to pay 20% more than when the market volume returns. And so one of the things healthy about markets is when you have a lot of volume, when you have a lot of people buying and selling, you get conviction because that means there's a lot of people that are moving that direction, and that means there's a lot of people that will buy the stock. Just like if you got a prime piece of property, there's a lot of companies that want to buy it, you're going to get a better price than if there's just one or two. And so one of the challenges of 24-hour trading brings is with a lot of people being human beings and being asleep, they're not able to buy and sell or trade at that point. So you're not probably going to get as good of a price as you would get during the regular market time.
Right. So TD Ameritrade, I think, first introduced this idea.
Yeah, so originally TD Ameritrade brought out the overnight trading. And then, of course, Charles Schwab continues that, but they never really expanded it. So they kept it at about 24 securities that you can trade overnight with TD Ameritrade, Charles Schwab. And they're very highly liquid. There's a lot of activity in those securities. So if you were going to trade something, you want it to be kind of limited because there are more buyers for those investments than others. So they still do it, and they're the first ones to do it. So, in true TD Ameritrade fashion, they're pioneers for the industry.
So, perfect. Well, thank you for talking to us about the 24-hour potential trading window, and thank you for tuning in today, and we hope you have a great day.